In terms of education, the completion rate based on both level and gender can be a useful indicator of the nation's educational success. It can provide insight on the progress of educational reforms and the effectiveness of educational initiatives. Additionally, the unemployment rate in Indonesia can be used to gauge the economic health of the nation. This rate can provide insight on the job market as well as the overall economic trends in the country. Further, the gross domestic product by economic sectors can be used to measure the country's overall economic performance and identify trends in the Indonesian economy. Additionally, the minimum wage in Indonesia for 2021 can be used to measure the purchasing power of the population. This rate can be used to assess the effects of economic policies and their impact on the citizens of Indonesia. The COVID-19 pandemic had a significant impact on Indonesia's employment rate in 2020. According to Central Statistics Agency, BPS, data, the unemployment rate in Indonesia increased from 5.33% in February 2020 to 5.61% in March 2020, and then to 5.93% in April 2020, as the pandemic resulted in widespread job losses and business closures. The continued impact of the COVID-19 pandemic, as well as economic and labor market conditions, impacted Indonesia's employment rate in 2021. The BPS data shows that Indonesia's unemployment rate was 6.01% in January 2021, slightly higher than the previous year's rate of 5.33%. The pandemic resulted in widespread job losses and business closures, particularly in tourism, hospitality, and retail, affecting women and youth disproportionately. The impact on education was significant, with schools and universities closing for extended periods of time, causing disruptions in learning. Furthermore, the pandemic disrupted education and training opportunities, potentially affecting future employment opportunities for students and workers in the long run. The COVID-19 pandemic in 2020 negatively affected the Indonesian economy, as it did the economies of many other countries. However, it has slowly recovered since then. Using Oken's law, we can see how GDP and unemployment rates are related to one another. The law describes the relationship between unemployment and a decrease in a country's production output. Oken's law hypothesizes that for every 1% increase in the unemployment rate, GDP will fall by 2%. The law's basic logic is that it contends that the level of GDP is determined by supply and demand, with higher demand leading to higher GDP. To meet supply and demand, such an increase in demand generally requires an increase in productivity and employment rates. In Indonesia, the minimum wage rate serves as an incentive for workers by guaranteeing a minimum standard of living for those in the labor force and promoting equitable compensation for workers. The minimum wage in Indonesia is set annually and is adjusted higher or lower accordingly to reflect changes in factors such as inflation and the cost of living. A minimum wage provides a safety net for workers, particularly those in low-skilled and low-paying jobs, to ensure that they are not underpaid or exploited in the workforce. Workers may be encouraged to seek employment and improve their skills if they are assured that they will receive at least some compensation for their efforts at a certain minimum level. Besides that, the minimum wage rate can serve as a reference point for employers to determine wages for their employees, thereby helping to alleviate income inequality and poverty in the workplace. There is also a correlation between the level of education and unemployment in Indonesia. Unemployment rates are lower for individuals with a higher level of education than for those with less. This is due to a variety of factors, including improved labor market skills, where higher education is more likely to improve an individual's skills and qualifications, making them more competitive in the labor market and less likely to be unemployed. Another consideration is people with higher levels of education have more access to employment opportunities, particularly in high-skilled sectors with lower unemployment rates. Finally, higher education can improve adaptability to labor market changes, lowering the risk of becoming unemployed even further. Indonesia has been progressively recovering its economy by implementing an expansionary monetary policy. The Bank of Indonesia kept interest rates low during periods of high unemployment and recession in order to promote economic growth, which boosted investment and spending. With more money in circulation means interest rates will fall, borrowing will rise, and aggregate demand will rise, all of which lead to a rise in prices and a higher causing, and ultimately in more job opportunities. As the economy begins to show signs of improvement, demand for products rises, resulting in increased demand for Indonesian goods and services, boosting the manufacturing sector.